Hello, welcome back everyone. It's great to see you all again for the second session of our advanced analysis series with Ichimoku Kinko Hyo. My name is Ali Mortazavi and I'm the head of education at Errante. Today, we will be diving deeper into the Ichimoku system, focusing on identifying and analyzing market trends to improve our trading strategy. So stay with me, that would be great. To mention that this webinar is brought to you by Errante, which is an online broker committed to providing top-tier services and building lasting and trusting relationships with clients and partners. Before we begin, please note that the content of this webinar should not be construed as investment advice. The strategies and information provided are for educational purposes only and should not be considered as a recommendation to trade in any way. Okay, after this risk disclaimer, let's take a look at what we will learn today. Before we dive in, let's take a quick overview of what we will cover today. We will explore how to use Ichimoku Kinko Hyo indicator to identify the beginning, continuation, and end of an uptrend. This involves understanding the relationship between the price and the indicator components, such as the Tenkan-sen, Kijun-sen, and Kumo. And then, similarly, we will examine downtrends, looking at how to recognize their start, continuation, and ends using the Ichimoku indicators. We will also learn how to identify support and resistance levels in sideways markets, which is crucial for recognizing potential entry and exit points, and also for avoiding false signals, which can end up our trade in a huge losses. One of the key to successful trading is precise entry and exit points. That's why we will discuss how Ichimoku can help us pinpoint these moments by, let's say, somehow getting into the hierarchy of the significance of the signals that Ichimoku Kinko Hyo can generate for us. Lastly, we will have a question and answer session where you can ask any questions you have, and we can discuss how to apply today's concepts to your trading strategies. So please don't hesitate to ask your questions. I would be more than happy if I know the answer to respond to you. Okay. Let's start by reviewing the fundamental definitions of market trends: uptrend, downtrend, and sideways. If you remember, we discussed this before in our previous webinars. Understanding these basics is crucial as they form the foundation for more advanced analysis, and we will also discuss how market momentum typically changes at the beginning and the end of these trends, and the relevance of Ichimoku in identifying these changes. First, let's define each market trend type. As you see here, we are going to highlight the uptrend, downtrend, and sideways market. An uptrend is characterized by a series of higher highs and higher lows, and this indicates a general upward movement in price. In an uptrend, the price typically stays above the Kumo, with the Tenkan-sen as a conversion line above the Kijun-sen as baseline. So the Chikou span, also be known as lagging span, should also be above the price, confirming the trend's strength. So this is how we can identify the uptrend using Ichimoku, as you see here with this uptrend at the beginning of this screenshot chart here. On the other side, you have the downtrend, which is identified by lower highs and lower lows, signaling a general decline in price. During the downtrend, the price usually remains below the Kumo, as you see here in this screenshot chart. The Tenkan-sen will cross below the Kijun-sen and will continue below the Kijun-sen, and the Chikou span will be below the price, and in the best scenarios below the Kumo as well, as you see here. So we have here an uptrend where you see we have typical higher tops and higher bottoms in the price, where the prices are moving above the Kumo, above the Tenkan-sen and Kijun-sen, and the Chikou span as well, all. Okay, so this is the characteristics of an uptrend. And here in a downtrend, we have the price below the Kumo, and the at Kumo is bearish. And also we see the Tenkan-sen below the Kijun-sen, and the Chikou span is below all. So this is a way to identify the market trend or to confirm the price action using Ichimoku Kinko Hyo. And then we have sideways or range-bound market. In a sideways or ranging market, the price fluctuates within a certain range without establishing a clear uptrend or downtrend. We know that. But let's see how Ichimoku relevance and how Ichimoku can actually help us to identify sideways. In a sideways market, the price will oscillate around the Kumo, and the Tenkan-sen and Kijun-sen may frequently cross each other. The Kumo itself tends to be flat, reflecting the lack of a strong trend. This is a way out we can recognize a range market like what you see here. We have a very, very thin Kumo ahead when we see the market's fluctuation within a range, and the price is almost interacting with the Kumo, the upper boundary of the Kumo, and we see the Tenkan-sen and Kijun-sen are not moving too far. So they're almost flat, and they have an interchanging role against each other, and they cross each other in different ways, frequently or time by time. So this is a clear indication of being in a sideways market. But it's not all. We can also use the Ichimoku, as we discussed in the previous webinar, to identify the momentum. So we have the momentum spectrum or trend strength. So now let's discuss this as when a new trend begins, momentum tends to be strong as market participants react to new information or market conditions. So this is often seen in the steep slopes of the Tenkan-sen and Kijun-sen lines in the direction of the trend. For example, here you see accompanying a very significant price action movement to the upside, we see the Tenkan-sen and Kijun-sen are in the steep slopes right here. Yep. So what is the Ichimoku signal here? A strong trend beginning is indicated by a clear crossover of the Tenkan-sen above the Kijun-sen for an uptrend, or below for a downtrend. For example, what you see here, this is a crossover from the Tenkan-sen below the Kijun-sen at the beginning of this downtrend, and here is a crossover at the beginning of a new uptrend after this range bound or sideways movement. Yes? But the important things that you have to remember, this is happening with the price moving away from the Kumo, not in the Kumo or toward the Kumo. So the Chikou span also moves in the direction of the trend, further confirming the increasing momentum in the market as we see here. What we have to keep in mind, as a trend matures, Momentum typically decreases as the market reaches potential exhaustion points or faces, let's say, resistance or support levels, very significant support or resistance levels. And this is reflected in the flattening of the Tenkan-sen and Kijun-sen lines, also the Kumo. In that case, a weakening trend is suggested by the Tenkan-sen and Kijun-sen lines converging and potential crossover signaling reversals. The price may start to enter the Kumo, indicating a potential trend change or consolidation phase. The Chikou span moving closer to the price line also indicates weakening momentum, as we see here or here. So this is how we can use Ichimoku Kinko Hyo to interpret the different market phases, as we discussed in our previous webinar, previous session. Now, let's focus on identifying the starts of an uptrend to have a more precise look at the market, let's say the price action and market trends. Using the Ichimoku indicator. Recognizing the beginning of an uptrend crucial for entering trades early and maximizing profits. One of the earliest and most reliable signals of an uptrend starting is when the price moves above the Kumo or cloud. Let's break it down to key indicators that signal this transition. First, price above the Kumo. This is the early stages of emerging a new uptrend. When the price breaks above the Kumo, it indicates that the buyers have taken control of the market, and this is a clear sign of upward momentum. Why is that? Please consider the fact that the Kumo represents a zone of support and resistance. When the price moves above it, it means the resistance has been broken and the market sentiment is bullish. Next, we have Tenkan-sen and Kijun-sen crossover, a bullish crossover where the Tenkan-sen as a conversion line crosses above the Kijun-sen as a baseline, which is a very strong buy signal. This crossover indicates a shifting momentum from bearish to bullish. The Tenkan-sen is more responsive to recent price changes. We know that, yes? And when it crosses above the Kijun-sen, it suggests that the recent price action is stronger than the longer-term trend. The third characteristics of the beginning of new uptrend is Kijun-sen below price and rising, or let's say price rising above the Kijun-sen and taking it with itself. The Kijun-sen or baseline acts as a support level when it's below the price and rising. A rising Kijun-sen indicates that the overall trend is upward, and it provides a support level below the price, making it a safer point for entering long positions. As you can see here at the beginning of this uptrend here, we have the price above the Kijun-sen, we have the Tenkan-sen crossing Kijun-sen, and we have the price above the Kumo, while the Kumo ahead is bullish. So this is a very, very strong signal of its significant uptrend at its highest momentum possible. And then we have Chikou span above price and Kumo. The Chikou span, we know as lagging span, should be above both the price and Kumo for final confirmation of the uptrend. And the Chikou span being above the price and Kumo indicates that the current price is higher than the price 26 periods ago. It confirms that the market sentiment is firmly bullish. So this is another indication for us to believe that a new uptrend is getting started in the market. And then we can look at the price action to see if the tops and bottoms are confirming the uptrend, the formation of the new uptrend or not, and then we can look for enter the market or get a buy position. And then also we have the Seiko span A above Seiko span B. This formation within the Kumo confirms the uptrend as well. Seiko span A is the leading span and Seiko span B is the leading span too. Yes, when Seiko span A is above Seiko span B, the Kumo is bullish. So the relationship between these spans provides a future outlook on the trend. Bullish Kumo suggests that the market sentiment is expected to remain positive. So the first one, it indicates price crosses above the Kumo is a buyer's strength, and the Tenkan-sen and Kijun-sen crossover is a strong signal to confirm that a new the bullish sentiment is increasing in the market, and then Kijun-sen below price and rising is a strong support level which is being held by the price, or let's say by the buyers. And Cinco span A above Cinco span B confirms the trend with bullish Kumo, and Cinco span above price and Kumo can be considered as the final confirmation. And we expect all of these characteristics to happen at the beginning of a new uptrend in the market. And let's now move on to understanding how to identify the continuation of a strong uptrend using the Ichimoku indicator. Recognizing these signals is essential for maintaining positions and maximizing profits in the trending market. So as a title, we have continuation of a strong uptrend with Ichimoku, and we know in a strong uptrend, the Ichimoku components are expected to provide solid support. Let's explore these indicators in detail. First, we have price above the Kumo with noticeable distance. When the price remains significantly above the Kumo, so you see, I have the same screenshot here to explain what is happening during real market movement. So after starting, or let's say emerging a new uptrend, so we have the continuation of a strong uptrend. When the price remains significantly above the Kumo, it signifies strong bullish momentum and the likelihood of the trend continuing. The Kumo cloud or the cloud acts as a dynamic support and resistance zone. So when the price is well above the Kumo, it indicates that the market sentiment is strongly bullish and the buyers are in control. The next characteristics of this phase is Tenkan-sen above Kijun-sen with noticeable distance. A considerable gap between the Tenkan-sen as a conversion line and Kijun-sen as a baseline further confirms the strength of the uptrend. So the Tenkan-sen is more reasonable, responsive to recent price movements that we discussed, while the Kijun-sen reflects a longer term trend. So a significant distance between them. If they can keep this distance with a similar slope, positive slope, it indicates a strong recent price action in the direction of the trend. So this is what we usually see here after crossing, after this crossover between the Tenkan-sen and Kijun-sen. We see how the Tenkan-sen is diverging, from the Kijun-sen as a longer term here, let's say support level. Yep. And the next one is Kijun-sen rising below, or Tenkan-sen rising above Kijun-sen, or Kijun-sen rising below Tenkan-sen. The Kijun-sen provides a reliable support level in an uptrend. So its rising nature indicates that overall trend is upwards, and it supports higher prices giving traders confidence to hold on to their long position, while the Tenkan-sen reflects a more recent market sentiment, which is expected to be more bullish than the previous. So that's why it's moving above the Tenkan-sen. And then we have Senko span A above Senko span B. This configuration of the leading spans indicates that the future outlook is bullish because it indicates a bullish Kumo, yes? And it suggests that the market expects higher prices. And then the Chikou span keep continuing above all the other components, should be above the recent price, Kumo, Kijun-sen, and Tenkan-sen, and a significant distance above the price line indicates a strong and sustained buying pressure. So first we have the strong upward momentum, then we have Tenkan-sen above Kijun-sen continuing above Kijun-sen which confirms the uptrend, and Kijun-sen rising below Tenkan-sen provides a strong support level for us to be more confident, and then bullish Kumo confirms the trend, and we have the final confirmation from the Chikou span. It's important to note the Tenkan-sen provides a reliable support level during a strong uptrend. So if the price pulls back to the Tenkan-sen and bounces off, it confirms the continuation of the trend, like what happens here. For example, at this candle, you see this is a very long lower shadow, but the price has not been succeeded to close below the Tenkan-sen. We consider it as a pullback to this very strong support level. And then when the price somehow, let's say, crosses above the last market top, it can be considered as a buy signal. So if the price pulls back to the Tenkan-sen and bounces off, it confirms the continuation of the trend. Next thing we can consider is Kumo thickness. A thinner Kumo suggests less resistance and easier price movement in the direction of the trend. However, it still acts as a support zone below the price. For example, during this rising periods, we have a very thin Kumo. It's bullish, still confirming the price upward movements, by the way, but let's say the thickness, the less thickness suggests that the market is on the move. And also we have to see how prices are moving above Tenkan-sen, because consistent movement of the price above the Tenkan-sen indicates a stronger momentum. Any retracement towards the Tenkan-sen that holds and reverses can be seen as a buying opportunity. And you see we see this is happening a lot here during this strong uptrend, like this case, or here after the second crossover between Tenkan-sen and Kijun-sen, we have the very nice pullback here, and then we have this retracement that can be considered as a new buy signal for us. Now that we've discussed the indicators of this strong uptrend, it's equally important to understand how to recognize when an uptrend is losing momentum and potentially coming to an end. This awareness allows us to protect our gains and prepare for possible trend reversals. Let's delve into the signs of a weakening uptrend using the Ichimoku indicator. First, we have the price retracement to the edge of the Kumo. When the price begins to retrace and approaches the edge of the Kumo, it indicates that the uptrend is losing strength. The Kumo acts as a support and resistance zone. As the price moves closer to the Kumo, it suggests that the buying pressure is waning and the support from the Kumo is being tested. Then we see Tenkan-sen and Kijun-sen convergence. The convergence of the Tenkan-sen as a conversion line and Kijun-sen as the baseline signals weakening momentum, like what we see here. You see, as we have this price correction started, we see this price correction started, we see the convergence between the Tenkan-sen and Kijun-sen. We should keep in mind that Tenkan-sen reflects short-term price movements. Again, I really want to emphasize this because this is a key to understand the shift in the sentiment of the market because it indicates a slowdown in the recent price movement relative to the longer-term trend, suggesting indecision phase in the market somehow. Then we have a horizontal Kijun-sen. A horizontal Kijun-sen indicates a period of consolidation and serves as a strong support level, specifically if we have the price somehow interacting with the Kijun-sen. When the Kijun-sen flattens out, it signifies that the market is stabilizing after a period of upward movement. And this can be a precursor to a trend reversal if the price fails to maintain above this level. For example, you see when we have a loosening momentum in this uptrend, we have the price falling below the Kijun-sen, and we have the Kijun-sen moving somehow flattened. Next thing we should consider is the convergence of Cinco span A and B, which leads to a narrowing of the Kumo, indicating a potential change in trend. The Kumo's thickness represents volatility and strength of support and resistance, but when Cinco span A and B converge, it narrows the Kumo, suggesting reduced volatility and potentially weakening trend strength during a phase of market correction, like what we see here. For example, following this market correction, we have the convergence between the Cinco span A and B. So this is an indication of the thickening of thinner Kumo, which is interpreted to less momentum or volatility in the market. And the next one is Chico span with little distance above price. The Chico span above the price indicates that the current price is higher than the price 26 periods ago. So a decreasing distance signals that the momentum is fading and the market may be preparing for a reversal. It's really important. So we have the weakening of the uptrend, we have the weakening momentum with Tenkan-sen, Kijun-sen convergence, we have a strong support level being penetrated by the price, and we have a narrowing of the Kumo, which is another signal of losing momentum, and we have a Chico span that cannot confirm a strong bullish sentiment into recent price action according to its close move to the price and the other components. So when Ichimoku components converge and the price forms a topping pattern, it's a clear sign of trend exhaustion. In that case, we are not going to buy the market until we see a clear indication of a new, let's say, accelerating positive momentum. The convergence shows a lack of directional movement, indicating that the trend may be running out of steam. And when the price oscillates between the Tenkan-sen and Kijun-sen, it reflects market indecision. Traders should be cautious and look for further signals before making trading decision at this case. Now we've arrived at the crucial part of our analysis with the Ichimoku indicator, identifying the end of an uptrend and the start of a bearish reversal. Recognizing these signals is vital for safeguarding gains and strategically positioning for potential downtrends. Let's delve into the indicators that signify this transition. So, persistent engagement of price with the Kumo and convergence of the components indicate a possible trend reversal. Here is how we can break it down. When the price retraces back into the Kumo, as we see, for example, here, it signifies that the uptrend is weakening, because the Kumo acts as support and resistance zone, and here it acts as a support zone. As the price enters a Kumo, it indicates that the previous bullish momentum is dissipating and the market is entering a phase of indecision. But we should not forget that a bearish crossover where the Tenkan-sen crosses below the Kijun-sen during an uptrend signals the start of a potential reversals, especially if the price gets below both of those averages. And this crossover suggests that the short-term trend is losing strength relative to the longer-term trend. So typical precursor to a trend reversal. For example, something like this. And you see, after losing the momentum of the price, even when it comes back again, we see we can totally understand the lack of momentum by not being not being able to get above this very strong resistance level. Okay, with 1, 2, 3, and 4 market top here. So this crossover suggests that the short-term trend is losing a strength relative to the longer-term trend, a typical precursor to a trend reversal. And then the Kijun-sen reflects a medium-term trend. When the price falls below the Kijun-sen, it indicates that the bearish momentum is increasing, and the Kijun-sen serves as a significant resistance barrier to any upward movement. This is what usually happens during market reversal or at the end of an uptrend, as we see the price moving below both averages and Tenkan-sen crossing below the Kijun-sen, but is still above the Kumo. Please note that, because we are at the earliest stages of this ending phase of an uptrend. And then the convergence of single span A and B resulting in narrowing Kumo indicates a change in market sentiment. And maybe we see the Kumo is getting it's changing from bullish to bearish. The Kumo thickness represents the strength, as we explained. So when it narrows the Kumo, suggesting reduced bullish sentiment and the potential for bearish reversal, especially when we have a Tenkan-sen below the Kijun-sen above the Kumo, which means the recent market sentiment is shifting from bullish to bearish. And then Chikou span crossing the price path provides a historical comparison to us when it crosses the current price path. It indicates that the current market conditions are weaker than those 26 period ago, reinforcing the bearish sentiment. So again, we have the weakening trend, we have a start of a new reversal, we have a strong resistance, we have a sentiment, we have a change in a sentiment, and we can use a Chico span as a final confirmation to compare it with the previous market sentiment. And all of this, at the top, you have to remember these signals typically manifest above the Kumo. So a failure to sustain above the Kumo after repeated attempts indicates that the uptrend is losing its strength. As you see, 1, 2, 3, 4 market tops all above the Kumo, but the price has not been successful to get above this resistance level. So this is a very, very clear indication of losing the uptrend strength. And also, when the price crosses both the Tenkan-sen and Kijun-sen, it reflects market indecision and often precedes a reversal. This crossover marks a critical juncture where the market sentiment shifts from bullish to bearish. Now, recognizing the start of a downtrend is essential for positioning ourselves correctly in the market and avoiding potential losses. So let's dive into the indicator that signals a beginning of a downtrend using the Ichimoku system. This is just like very, very similar to beginning of an uptrend. When the price falls below the Kumo, it indicates the weakening of the previous trend and the potential start of a downtrend. We know the Kumo serves as a significant support level. So when the price moves below the Kumo, it changes the role from support to resistance, and it suggests that the bearish forces are taking over, signaling the onset of a downward movement. And we have a crossover between Tenkan-sen and Kijun-sen. This crossover is critical signal of a trend reversal. And the Tenkan-sen reflects short-term price movements, and this crossover indicates we have a accelerating bearish sentiment in the market, as you see at the beginning of a new downtrend. And then we have the Kijun-sen decreasing above the price, because now the Kijun-sen is acting like a market resistance. So it's taking place above the price. However, it's decreasing because the price is decreasing, and the average 26 periods average is decreasing. So the Kijun-sen represents the medium-term trend. When it's above the price and decreasing, it indicates a strong resistance level, reinforcing the bearish sentiment and the continuation of the downtrend. And also the same to Kinko span A, moving below Kinko span B. The configuration of Kinko spans provides a future outlook on the trend. So a bearish Kumo with Kinko span A below Kinko span B suggests that the market sentiment is likely to remain bearish. And it's always worth to consider a historical comparison. When Chico span is below the current price and the Kumo, it indicates that the current market conditions are weaker than those 26 periods ago, confirming the bearish trend. And you see we have the trend weakness indication, and then we have a signal of the very early reversal, possible reversal. We have let's say we have the component changing the role from support to resistance, because the price crossing all of them, and then is crossing all of them, and then we have the change or shift into general market sentiment by having a bearish Kumo, and the Chico span can give us a historical comparison, confirms the downtrend. And it's really important to note when the price and other components cross the Kumo simultaneously, it further validates the initiation of the downtrend. So this confluence of signals strengthens the bearish outlook and provides a clearer indication for traders. Now, here we're going to continue our discussion on identifying the continuation of a strong downtrend using the Ichimoku indicator. Recognizing the signals is crucial for maintaining profitable positions and managing risk effectively. Just as we looked at the strong uptrend, we will now explore the downtrend, which is essentially its mirror image. Okay, so let's delve into the key indicators. I will make it a very brief. The first indication is the Kumo serves as dynamic support and resistance, and we have the price below the Kumo with a noticeable distance. So you see, it means the market momentum is able to continue this narrative below the Kumo and below the other, let's say, components like Tenkan-sen and Kijun-sen. Then we have Tenkan-sen below Kijun-sen with noticeable distance. It means the Tenkan-sen is staying below the Kijun-sen with let's say increasing or distance, which can further confirm the downtrend. And we know Tenkan-sen is more sensitive to recent price movement, and when it remains below the Kijun-sen, it indicates sustained bearish sentiment and a strong downward pressure. And also Kijun-sen declining above Tenkan-sen. It's better to put it this way, that Tenkan-sen declining below Kijun-sen, yeah, because the Kijun-sen reflects a medium-term trend, and its position above the Tenkan-sen reinforces the bearish outlook, providing a barrier to any potential upward correction. So in that case, we can account Kijun-sen as a very reliable resistance level during this downtrend, and so we can use it as a stop loss or something like that. And then the Cinco span A below Cinco span B. When Cinco span A is below Cinco span B and continues to decline, it confirms the bearish trend. We usually expect the price to form diverging Cinco spans, okay, which means a thicker Kumo ahead. So this is a very another indication of a accelerating downtrend. And of course, Chico span below price and Kumo and other components with noticeable distance. So here's we can get a strong, we can understand the strong momentum in the market. We can confirm this downtrend, and we can use the strong resistance levels to somehow measure the maybe the all market rebounds, or to use for the as a metric for our stop loss or something like that. And also we can confirm the trend using the Kumo ahead, and we can get more confidence with Chico span as the historical comparison. Okay, so but here are some notes I would like to emphasize on them. Please note, in a strong downtrend, the Tenkan-sen acts as a reliable resistance level. If the price attempts to move up but gets resisted by the Tenkan-sen, it confirms the continuation of the downtrend. Then, thin Kumo. A thin Kumo below the price suggests a strong momentum in the downtrend. Please note, a thin Kumo, not a thick Kumo. It indicates that the bearish forces are strong and there is little resistance to further downward movement. So this is a very, very good indication of a strong downtrend. Of course, price below Tenkan-sen is a very, very great signal for us. Consistent movement of the price below the Tenkan-sen indicates a strong momentum. Any attempts to move above the Tenkan-sen that fail can be seen as an opportunity to reinforce short positions. Okay, as we continue our journey with the Ichimoku Kinko Hyo indicator, it's important to recognize the signals that indicate the continuation of a weak downtrend, let's say weakening downtrend when we are getting to the end stages of a downtrend. These signals help us to manage our positions effectively and prepare for possible trend reversals. Today, we'll explore the indicator that signal a weakening downtrend. Yeah, and laying a strong foundation for understanding market behavior. First, we have price retracement to the edge of the Kumo. We were getting into the end of a downtrend. We usually expect the price to get back to the Kumo, for example, during all of, or at least it's usually, let's say, decreases the distance between the Kumo and the price. Yep. For example, here, when we see the momentum is getting out of the steam, the price is getting closer to the Kumo. So when the price retraces the edge of the Kumo, suggests that the downtrend is losing its strength. And then we have a Tenkan-sen and Kijun-sen convergence. It's really important indication. The convergence of the Tenkan-sen as conversion line and Kijun-sen as baseline signals weakening momentum, because one of them is for recent market sentiment and one of them for the long-term sentiment. So when they get closer to each other, which means a slowdown in the recent price action relative to the longer term trend, suggesting in the decision, some indecision in the market. However, another one is the horizontal Kijun-sen. This is a, let's say, controversial situation for Kijun-sen, because Kijun-sen, we know, indicates the longer term moving average. Okay, a horizontal Kijun-sen indicates a period of consolidation most of the time, but it depends on the confirmation from the price action as well. However, we know it serves as a strong resistance level during a downtrend. So when the Kijun-sen flattens out, it signifies that the market is stabilizing after a period of downward movement. So this can be a precursor to a trend reversal if the price fails to maintain below this level. For example, sometimes it gets above the Kijun-sen, sometimes not, but it can be at least a warning not to enter the market in the direction of the downtrend. We should wait when we see the signals. It means when we see the price moving between the Kumo and Kijun-sen. And then the situation of the Cinco spans, which is very important. The Kumo's thickness represents volatility and the strength of support or resistance in the market. When Cinco span A and B converge, it narrows the Kumo, suggesting reduced bearish sentiment and potentially weakening trend strength. And then we have the Chico span having little resistance below the current price, which is a sign of trend exhaustion. The Chico span being below the price shows that the current price is lower than the price 26 years ago, but a decreasing distance signals that the momentum is fading and the market may be preparing for a reversal. It may not be a good example of this. Let me just take another look. For example, here on my MetaTrader 4, you can see, okay, I don't have Ichimoku here, so let me just apply it in a second. Ichimoku Kinko Hyo, we have the all components, we have a very clear, we have them in a clear color, so let's just apply it, and let me remove the other moving averages. And here, okay, so as we discussed, you see when price retracement to the edge of the Kumo, we have the Tenkan-sen and Kijun-sen convergence, and sometimes the crossover in the opposite direction, and then we have the horizontal Kijun-sen as we see here, and the price getting closer to the Kumo, and Chico span with a little distance below the price, and we see the Chico span is getting closer also to the price, and these are all good indications of lacking bearish momentum in this market. So we have a weakening downtrend, we have a weakening momentum, we have a strong resistance, and we have narrowing Kumo, and we have a price getting closer to its historical movement. So all of these means we are in the case of a weak downtrend phase. When Ichimoku components converge and the price forms a topping pattern, it's a clear sign of trend exhaustion. So the convergence shows a lack of directional movement, indicating that the trend may not running out of may be running out of steam. Okay, so when the price oscillates between the Tenkan-sen and Kijun-sen and sometimes Kumo, it reflects market indecision. So traders should be cautious and look for further signals before making trading decision at this case. So it can be very useful to prevent you from false sell signals. Now let's continue our journey by examining the signs that indicates the end of a downtrend and a potential start of a reversal using the Ichimoku Kinko Hyo indicator. Understanding these signals helps us identify opportunities to shift our positions and take advantage of new trends as they form. The first indication is when the price retraces to the Kumo, it suggests the downtrend is weakening. This is the end of a downtrend. And the Kumo acts as a zone of support and resistance. When the price moves into the Kumo, it indicates that bearish momentum is fading and the market is experiencing a decision, often a precursor to bullish reversal. Then we have a Tenkan-sen and Kijun-sen crossing each other, from which is Tenkan-sen crossing above Kijun-sen or crossing from below. This crossover suggests a shift in momentum. It's very important. The Tenkan-sen reflects short-term price movements, and crossing above the Kijun-sen indicates that the recent price action is gaining strength, countering the longer-term trend. But please note, it can be a very strong indication of ending a downtrend, but to confirm if it's a reversal, a bullish reversal, we need more evidence from the price action. We will discuss it maybe in our next session. By the way, the next one is Kijun-sen below the price. When the Kijun-sen is positioned below the price, it acts as strong support level. So the Kijun-sen represents a medium-term trend. And when it gets below the price, which means it now is changing the role from resistance to support. Now we expect the price to move above the Tenkan-sen, Kijun-sen. And also let's discuss the situation of Kinko span A and B, which are converging. The convergence of Kinko span A and B resulting in a narrowing Kumo indicates a change in market sentiment, which is usually happen when we have a strong correction during a downtrend into the market. We have a Kinko span B getting closer to Kinko span A because we have this is a bearish Kumo, and in bearish Kumo we have a Kinko span B above the Kinko span A, but the lack of momentum causes the convergence between these lines. And also we have a Chico span crossing price upward. The Chico span offers a historical comparison again, and its movement above the price indicates that the current market conditions are stronger than those 26 periods ago, confirming the bullish reversal. So we have a weakening downtrend, we have indication of a reversal start, we have a strong support, or let's say the components changing the rule from resistance to support, and then we have a shift in market sentiment, and we can confirm it compared to the previous market movement or price action. However, it's really important to note that these signals often occur within the Kumo, where the market experiences indecision. And this is a dilemma because we, at the time of this, all of this happening, we don't know if it's just a pause during a downtrend or it's a reversal. So please don't get me wrong, okay? This convergence shows that the previous trend is losing its momentum, paving the way for a potential reversal. It's not a confirmation of a reversal itself. When the price crosses both the Tenkan-sen and Kijun-sen, it reflects market indecision and a likely trend shift. So this crossover marks a critical point where traders should be alert for potential changes. Continuing for our discussion on trading markets, it's equally important to understand the characteristics of sideways markets. Sideways markets can often provide false signals if we don't give priority to price action and Ichimoku features. So let's explore the indicators that signify sideways or range-bound markets using the Ichimoku system. The first indication is that price remaining in the Kumo. When the price remains within the Kumo, it indicates a weak trend. The Kumo acts as a zone of support and resistance, so when the price is within the Kumo, it shows that there is no clear directional movement, indicating indecision in the market. And the proximity of the Tenkan-sen to the Kijun-sen within the Kumo signals low volatility, which is the next characteristics of a sideways market.